Welcome to your favorite podcast, the Broad Street Update, in partnership with SEM Capital. And as usual, we have our favorite research expert, and that is no other person but Jide Downsy, Head Research for SEM. Welcome.
Yeah, thank you. Good morning.
Let's dive into it. The equities market, you've been quite bullish about it. Don't you think it's looking like a bit of overconfidence? Or why? What is, and do you think it's sustainable? Do you think it's going to reverse anytime soon?
Okay, thank you. The current market or the current activity in the market is still quite sustainable. And I will tell you why I'm quite bullish with the equities markets that we currently have. When you look at the overview of the financial market, you want to understand what are the drivers of the momentum in all of the financial market, whether the FX market, the equities market, or the fixed income market, all right? So understanding that will help you get into seeing why this current momentum in a particular market is going to be sustainable or not. I'm going to give you 3 insights into that quickly, all right? So for every financial market is driven by the overall economy in the first place, all right? So if the economic trajectory is being understood vis-a-vis the macroeconomic dynamics, right? You want to look at the government policies, you want to look at what is exactly at play in the economies and the rest like that. Also want to look at the monetary side of the monetary policies. Do they really favor a particular financial market against other financial instruments and the rest like that? So the overall economy is a focus on its own. So when you look at the Nigerian economy as a whole, the economy is not where we really want it to be, but it has never been currently in where it was before now, all right? So we've taken the macroeconomic shocks, the subsidy removal, the FS unification, market unification, and a couple of that as well. So right now, the economy is in a stable state, right? There is no pressure in the economy. And take, for example, even when we had crisis in the Middle East, right? When you look at that crisis and you look at the impacts of that crisis on our own economy, it's quite minimal, right? Take, when you look back into 2022, where there was a crisis in between Ukraine and Russia, you saw that immediate impact and very significant in the Nigerian economy. At a point, our exchange rate, all right, went a wire. You can also see the interest rate as well. Interest rate started around 11.5, and because of that crisis in the middle in Russia and Ukraine, we saw the interest rates moving to 27.5 from 11.5. So that alone is significant in the financial market. So when interest rates moves like that, you understand that yield demand will go higher up. Why the problem or the challenge will bounce on the equities market. Right now, there is nothing like that. Interest rate has stabilized. Right? The pressure on FS has stabilized. You can predict that before now, the FX markets in 2022, 2021, 2023, early 2023, if you need FX, you probably will have to deposit over time, all right? Go to black market deposit, and people could even run trip within that environment. You could game the system because when you hold it today, tomorrow the price will have gone up. So you begin to take advantage of the FX. But right now, nobody is even interested in holding the dollar because holding it is against yourself. So every of the dollar is in the market, is in the financial system, right? And that is supporting the equities market, okay? Because it has boosted liquidity over time in the equities market. So when you now look at our inflation right now, you can go to the market, you can be confident that what you bought yesterday at a price of XYZ, you will go today, you will still meet the price at XYZ. And tomorrow as well, you are almost assured that that price is not going to change. So that level of predictability is creating stability, where investors can now say that, okay, within the next 1 month or 2 months, barring all our unforeseen circumstances, what is currently prevailing now, is it sustainable? Yes. All right. So that is creating that bullish or a very strong sentiment for the equities market. So in the overall economy, there is stability, there is predictability. All right. And there is forward projection for the economy. So that is one side of that. The next is the financials, all right? Those organizations, all right? Those organizations are moving away from stability, or they're moving away from recovery to more of consolidation now. All right. I think last week we talked about the likes of MTN now coming out to pay that kind of a dividend and the rest like that. So when you look at their financials in 2023 and in 2024, MTN took FX loss of about 900 billion naira in 2024. All right. In 2025, they were able to recover that. And now their financial in 2026 is very strong. All right. So that tells you that in the financial market, these are the guys that are now playing in the equities market, and their financials is now telling you that there is more of interest and confidence and resilience around that financial. So it's beginning to be very strong, and investors are looking at it that if these guys could bounce back within the space of 2 years, all right, and then they begin to move these markets. So forward projection tells you that they are going to be doing more. All right, in as much as the economy is supporting that financial. So that is that. Now the last one is the market itself. All right, the market volume is not as huge as, because there have not been too much of new players in the market. So everybody is still so everybody is still buying within the same space. All right. And because you have that projection that everywhere is going to be fine, so you continue to buy into that. Liquidity has been very significant. And even when CBN is trying to absorb the liquidity, you'll still see that liquidity increases in the system. And for every proactive investors, you always look forward to where the returns will be for you. All right. You can't keep cash because the cost of keeping cash is more expensive than the cost of even investing. So investors have the mandate to continue invest, right? And they look at the market that can give them the return expectedly. So that is why I am very strong, bullish within the equities market. You may not see that rally that we saw between the first 5 months of the year.
Culture's good. All right. About that.
Yes. You will not see that rally again because we are now in the third quarter, and I'm going to discuss that because there are a couple of things that impact the financial markets, the equities market, the fixed income market, every of the quarters. Right. Now, this is the third quarter. The third quarter is actually the period of transition from the second quarter, which is the half year financials, to the full year. All right. Now, the third quarter looks at what is going to happen with their financial at the end of the year if they have made this in the first half of the year, and we have built in that price for the full year. So can we begin to relax our projections and an expectation? That is why you see that slow but steady momentum in the third quarter. Again, this particular quarter, third quarter, is going to be very significant as well because it begins a pre-election season, right? Campaigns will be starting this August, all right? And everybody begins to look towards what is the direction of the players, the major players in the democratic setting. So third quarter is also being used for that, all right? So investors want to look at even the market structure as well. SEC had just approved the kind of changes where the number of units that can move some shares has also been approved. So investors are also looking at that while we have a strong expectation for better performance in the equities market, all right? What exactly is going to be the full year valuations of these stocks or of these very tickers, so that we begin to buy and take some caution ahead of the full year, all right? So you may not see that performance rally like that, all right? But investors are taking caution, relaxing, and also being very technical as to warehousing their gains and also not losing out of opportunities that will still be in the equities market.
Thank you very much. The buzzword for me there is warehousing your gains. Again, I also just want to look at the projection of the equities market for the third quarter. You've delved into it, you've analyzed it, but I'm going to ask you this question straight up. Are you saying that the bulls will keep riding, or you're saying that, look, the bear might come and wrestle at some point?
All right. Yes. So you see, every financial market has its direction. The third quarter basically will have the wrestle between the bull and the bear, depending on investors' sentiments and various other happenings in the economy. I've just talked to you about the economy. The economy is still very bullish.
Yes.
That notwithstanding, what exactly happens in the third quarter? Maybe some people who have kept their money from January because of education may begin to take that, because third quarter, of course, there's resumption for new sessions and the rest like that. That may not totally be correct, all right? But you'll find some who are saving ahead of resumption. So those ones are there. We also have portfolio managers who want to also do some portfolio valuations and say, rebalance, exactly. So those ones are there. We have new entrants who are just getting into work or getting to know equities and the rest like that. They are also coming. They also want to move the market. We have Dangote Refinery, which has submitted some of its documents or have started the process with SEC. All right. We expect Dangote to come into the market in September. That will also create some level of activities in the equities market. All right. But right now, those things that are for the markets, right? They are weightier, they are better, they are stronger than those things that are against the market. And that is why we say that even when there's a level of wrestle in the market, we will still see the bull moving more than that of the bear.
Fantastic. So let everybody get your war chest ready. You need to start investing heavily. And like, SCM is already positioned to give you those advice, lead you where the money is, skate you to where the money is. And I'm sure Jide is ever ready to deal with it. Anytime you call him, he'll be available. You can always follow us on all of our social media and those which will be scrolling on the screen, so that you can, get latest updates and new market information as it comes out. And also register for the email so that you can get their emails as they release this information. What is your outlook for the third quarter? For what will be your, how do I put it now? Is it do I call it outlook? Based on what the economy is saying, what would be your general outlook on our outlay for the economy for the third quarter?
Okay.
Or outside equities?
Okay, yes. Okay, so we talked about equity. The economy is doing fine. We said that according to projection, we should be expecting CBN by the end of the quarter or early fourth quarter to come up with probably a revised interest rates direction. All right, do maybe 50 basis points to 100 basis points, because all of these things that have impacted the likes of inflation, we expect inflation to begin to decelerate again as settlements between the US, Iran, and Israel coming up. So that alone is also going to shift focus to the fixed income markets, where people now want to take and lock in at a higher yield as regards that. For the economy as well overall, even when we may have political anxiety, just like we're having in Osun, and then the presidency election, the general election coming up, so there may be a political anxiety. That as well may not create a huge distortion in the financial market. So give or take, Nigerian market is still a very good place to be ahead of various other listings that will be coming into the market. Okay, we expect that this third quarter and even going through the end of the year as well, that the FTSE Russell relisting of Nigeria into their platform, and also the S&P Global that indicated that Nigeria will be relisted into their frontier market. So that alone is giving confidence to the Nigerian market from the international space. All right, that Nigerian market is still where we should go. So overall economy, we still believe that the economy is going to be doing well, because all other things being equal, as we see currently, the economy is fine. You can predict major things that will happen in the economy, and you can be right about it. All right. So all other financial statements as well have given us an idea into what the financial performance of these companies will be all through the end of the year. So the Nigerian market, there is a strong positive outlook for the Nigerian market.
Oh, thank you. I Before we go, I wanted to you spoke about this a while back. You talked about strong the Nigerian capital the Nigerian market is highly liquid um because of the liquidity is readily available. It's before now we used to be scared because we had a lot of foreign investors, foreign position in our market, made it look like we're sitting on a kettle of gunpowder. Like, look, anytime these guys start to pull out their money, but you said it's no longer the same.
Yes.
That the structure has changed.
Yes.
No, I don't know. It's for me. I want to ask: don't you have mixed feelings about it? That we are the people playing our own market. That even foreign investors are. Is it that they are disinterested? Is it that we became so liquid that
Okay.
there's no space for them to come in? I
Okay.
just briefly before we
Okay.
close.
All right, fine. It is not that they are disinterested. It is not that there is disincentives in the Nigerian market. All right. It's just that the local players that felt that they got their hands burned earlier before now in maybe 2008 when there was financial crisis and the rest like that, they begin to rethink their stance in the equities market or in the Nigerian financial market. All right. In the sense that, there is a level of education now. There's a level of the platform now, the structures and the rest like that has now given confidence to the fact that you can all come in and the risk is as low as anything that you can think about. All right. Why? It's not that the foreign investors pulled out, all right. It's just that the participation of the local investors increased, and that would decrease the participation of the foreign investors, all right. So that is what exactly happened, because now that the local investors are believing more and taking ownership of their own market, all right. So it tells you that even if foreigners want to come, they have to come and wrestle with the little side of the bite that is available while the domestic guys are there. Okay, take for example the PFAs, all right. The PFAs are playing significantly now in the equities market. Pencom, I think in June or May, whatever, he revised their investment policy to say that, okay, you can begin to have a larger chunk of your NAV in the equities market. So, and PFAs currently, I think they have over 25 trillion in terms of their total assets for the PFA. All right. So, about 3 or 4, 5% of that coming into the equities market. That tells you that what exactly is So the number alone, all right. Talk about the asset managers as well that also have some funds which are equity based or they are proprietary funds and the rest like that. So those are the guys that are investing heavily in the Nigerian market. There are some people, even students now, all right, because there is a program now that we also go to schools, secondary schools, university, polytechnics, and tell them that you can begin to invest early enough, all right? From the various social media platforms, you see people talking about investment, and people have an idea, okay, I also want to be part of this investment. These are domestic guys. So by the time all of these guys are having that interest in the Nigerian market, is weighing on the other, the foreign participants, because those ones now are now like, these guys are taking my shine because they are a little restrictive in terms of where they want to go. Okay, foreign investors just know that, I'm only going to concentrate on this particular pot. While domestic investors understands the entire terrain, so they can buy into various of the pots in the market. Exactly. All right. So that is what has happened. So, and it's because when you begin to see domestic guys playing in the domestic market, it gives you one assurance, is the fact that people are now beginning to believe in what is happening within their domain.
Wow.
Yeah.
People beginning to believe with what's happening within their domain. It's a buzzword that I think should resonate within you and I. Finally, I just want, are there people out there that are still skeptical about what to do before we go? Can you just tell them and say, look, this is what you would want to advise?
Yes.
They do.
Okay. Yes. Of course. Yes. You can't take that the fact that people are still very careful as regards the entire market.
Yeah.
And that is why we have professionals. We have the asset managers that can always look at your own risk profile and then be able to advise on the kind of, or design a kind of bespoke portfolio for you that will meet your financial needs in the future and your own, your interest as well and your risk. All right. So come to SCM Capital. We can always give you an advice as to where to place your money, how to place your money, the risk assets and the safe asset as well, and the level of returns you'll be expecting, assured and also variable as well, depending on the kind of portfolio we structured for you. All right. So that's the advice.
Thank you very much. You've heard it here. And we'll keep saying it. Your war chest can only grow if you invest. If you need to make your money work for some money, do not allow your money sleep. Thank you very much. As you come your way once again, I remain your humble host, Dr. Temitope Akinwunleola, signing out for Broad Street Update for today. Thank you very much.
Thank you very much.
Yeah.
All right. Thank you.